Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is October 28th, 2013, and today I will go over two commodity pairs real quick, and that's gold futures and crude oil futures. Now let's just start out with crude, currently on the hourly charts, and as we zoom out, we see that we had an impulsive waves going upwards, and then we also got that corrective phase which has recently ended. So now as we take a closer look at the impulses, we see that we had that wave 1, which was followed by a 76.4% correction for wave 2. Wave 3 slightly extended past that 161.8% fib mark, and that fifth and final wave did about 100% of that wave 1. Wave 4 rather retraced about 38.2%, slightly below that, slightly below 38.2%, and this wave overall, this larger wave overall, was retraced by a 76.4% retracement. And also, as we take a closer look at the corrective phase, so that wave A, that was followed by a 61.8% correction for wave B, and wave C actually extended 161.8%. So right at that point, right at that 76.4% fib mark. So we did see prices start to take off from this point. It's currently at a good area to look to enter long, and that confirmation would come with a break of this descending trend line, but the outlook of this commodity pair is definitely upward. This futures, the outlook is definitely pointing up, so our bias on this is upwards, and you can definitely look to enter this future long. So let's shift gears over to gold. And with the gold futures, we have been tracking this for some time now, and our analysis have been on the mark thus far. So currently with this, we saw that 76 prices retrace slightly beyond that 76.4% correction. Let's just illustrate that real quick. So slightly above it rather. And we also saw it found support at this ascending trend line. We also saw prices were resisting this descending trend line, currently broke above, and it's finding support along this ascending trend line right here. Now as we zoom in on the pair, we see that we initially had this pegged as 1, 2, 3, 4. We were looking at this as our wave 4. So I was anticipating a move towards the descending trend line, which it recently broke for a retest and then give us that fifth and final wave. But we did not see that, and we saw prices take off from that point. So initially I have this labeled as 1, 2, 3, and then that would have been our wave 4. As we see with this, wave 2 retrace slightly beyond that 50% mark. So we should see something similar with wave 4. We should see a 50% correction, which would have correlated with that move towards a retest. But it appears if price did a 23.6, slightly beyond that, which is too short of a correction. So what I'm looking at now is an extended wave 3, which extends 261.8%. And as we see, it's just a tad shy of that. Just a couple of points off that 261.8% extension. And then at that point, we would then see that 50% move, which would terminate about 1320. So looking for this wave, this move, this pair, this future to correct a bit. So looking for a break of this ascending trend line. So it's currently holding the trend line, so a break of the trend line would confirm that, and you can then look to enter this future short and look for it to push down lower. So what that means for the forex crosses or forex pairs is that definitely expecting risk to be off this week. So if we do see that break, that would confirm that, and we should see the dollar, the yen, and the Swiss crosses to rally. So definitely looking for a break in this pair, and then at that point we'll look to take advantage by looking at dollar pairs, looking at the Swiss and the yen pairs, and we'll all take it in the favor of risk aversion. So that's the daily video for today. Any questions or comments, definitely feel free to jump in the chat room and I'll gladly assist you with any questions or comments that may arise. And for you guys trading, have a safe week trading and good luck.